Good evening, everyone. Welcome to tonight's Hookup with Real Estate Masterclass. Donna Hook, my husband Ken Hook, were the co-hosts for this. We have a very special guest tonight, Arsenio Hart, and I will introduce him momentarily. First, just want to go through a brief PowerPoint. So, we do encourage you to stay connected with us, and there are two ways to do it. You can stay connected through YouTube, which is at youtube.com/the @hookup with real estate. And you can also stay connected on our Facebook page, which is facebook.com/groups with an S/hookup with real estate. So you learn about our monthly master classes there as well. Okay, so next I want to share what our mission is. So our mission is to provide aspiring and early real estate investors with exceptional education, skills training, and opportunities to invest in profitable real estate, while simultaneously sharing ways to avoid costly mistakes like those my husband and I made early on in our real estate journey. And you can read about, oops, forget that slide. I forgot to delete it. You can read about our journey in the book called Real Women in Real Estate, which you can get for $2.99 on Amazon, or I can ship you a signed copy, soft cover, for $17. Okay. Next up, I just want to mention that my husband is a licensed New Jersey realtor, and he works for Weichert. So this is his website. If you're in the northern New Jersey area or you need a referral, please reach out to him. Lastly, this is our calendar. We are a monthly master class. The ones in red are the altered schedules. Just to point out, we may have an altered schedule in August, so stay tuned for that. We are powered by Legends Equity Group, and this is its founder, Alex Lovely. He runs a free educational call on Monday nights called Rookie Roundtable, so you can continue the education there. And Ken, would you please read the disclaimer?
Yes. We appreciate you attending the Hookup with Real Estate Masterclass presented by co-host Kenneth and Donna Hook. The content we provide is strictly for educational purposes and not intended as legal, financial, or investment advice. Remember, participate at your own discretion. Real estate markets are subject to change and can be dynamic. Hookup with Real Estate and its representatives will not be liable for any outcomes resulting from the information provided. Seek professional advice before making any real estate investment decisions. By attending live, you consent to this event being recorded and understand that internet security is not absolute.
Thank you. And one more thing, please share the quote.
Yes, the quote of the day is, "Be not afraid of growing slowly. Be afraid of standing still." Ancient Chinese proverb.
All right, great. So now is the most exciting part of the call, where I get to introduce our very special guest calling in all the way from Okinawa, Japan. So it's actually not Wednesday where he is, it's Thursday. So let me introduce Arsenio Hart, who has 14 years of active duty in the Marine Corps and currently serving there now. He began his real estate investment journey in 2021. He's currently in a coaching program by high-level mentors. One of them is Amy Majori, who is featured on HGTV and completed over $40 million in transactions. He's invested in single-family and multifamily properties. He's now doing a fund of fund. He's also part of Raise Masters, which is Hunter Thompson's program that of capital raisers who's raised billions of dollars. As a father to 5 beautiful children, 15-year-old daughter, 5-year-old twin boys, and a girl, and a 1-year and 6-month twin boys. Got your hands full. And of course, he is the host of a podcast called Action Takers Unscripted. So that's why tonight's theme is 7 ways to take action as a new real estate investor. And I'm going to stop sharing my screen and welcome Arsenio. Thank you for being here this morning. What time? It's morning there. Okay.
Yes. Donna, thank you. Ken, thank you for at least providing me the opportunity to come in and share my thoughts on just the real estate game and just taking action. It's just an incredible experience and very humbled to be on your show tonight. Thank you so much.
Thank you.
Thank you.
Thank you.
So just give us a little bit of background. I know I read your bio, but I'm sure there's a few other things you'd like to share. So please do.
Oh yeah, absolutely. Besides, me being a dad, that's taken up a lot of time, as you can see. Having 2 sets of twins has been an incredible journey. And yes, I do have my hands full. Me and the wife.
Are you a twin?
I am not a twin. What's incredible about this is my wife and I have twins on side of our family that not that we know of. Like, I'll just say that it may be later on down the road, but we both had twins just randomly. I guess we do have twins in our family now. So there's that. But yeah, so I started my career in real estate about 3 years ago. I think I'm going on 4 years now. I'm going on 3. Yeah, so 3 years in next month. I'll tell you that. But before that, and of course, I was still in the Marine Corps because I've been in the Marine Corps for 14 years. So being in the Marine Corps has really opened my eyes to a lot of opportunities and has provided me a lot of opportunities. We was kind of in that conversation prior to starting it, just about these opportunities. It's just I've been opened up to travel the world, not only travel the world, but become a leader in the Marine Corps. So that has developed me, and not only become a leader, but become a father, become a husband. Marine Corps has introduced me to my wife and allowed us to make a family and grow our family within the Marine Corps. And then, things happen as far as life. And it allowed me to think about other things and ways to create passive income. And one of those opportunities came into play again 3 years ago. I didn't really learn about investing until probably about 4 years ago. And then 3 years ago is when I actually took action to make the step in purchasing my first investment property.
Well, tell us about that.
Yeah, so this was a single family house in Memphis, Tennessee. So I'm from Tennessee, born and raised in a small town called Milan, Tennessee. And I wanted to look in Memphis because that was the location where I kind of knew the market. I've had family there, and I kind of grew up there. Milan, Tennessee isn't too far from Memphis, Tennessee. So I wanted to get started in something in regards to investing, and a single family house was my first step. Granted, I learned about investing through the purple book that we call Rich Dad, Poor Dad. I think almost every investor has started with that book, and it is a very popular book, and has very intriguing and eye-opening for any new investor or that is trying to learn or get started. So I started with Rich Dad, Poor Dad.
And just to interrupt you, if you don't know who the author is, it's Robert Kiyosaki.
Yes, Robert Kiyosaki, who was also a Marine, and just talks about his story about his rich dad and his poor dad. He says it's two dads, but it's one of his best friends' dad who taught him how to invest in real estate, and um, the poor dad being his dad who grew up as who was a teacher and was a hard worker and everything, and just didn't know how to invest in real estate, and was afraid and didn't really educate himself. And we'll dive into the education piece later on as I get into the talk piece. So again, I started with Rich Dad Poor Dad, looked into the housing market inside of Memphis, Tennessee, took action a year later. And again, we'll talk about that too. I had analysis paralysis, fear, not knowing, et cetera, et cetera. And then I finally took the action a year later. But
So what motivated that action?
that's a great question. That's a great question. What motivated that action? So I think what motivated that action was the people I hung around. So I was introduced to someone, John Durius. He was a Marine as well. And he pretty much sat me down and showed me what investing was. He was really good in the stock market, but he also talked about his investments in single family homes. And he showed me what he was doing in the market. And that's what really catapulted me to take action and stop being afraid and go forward. So his encouragement, his knowledge of him sharing with me and taking me under his wing, it really made me want to take action and motivated me. And he showed me the numbers as well. Show me his numbers, show me the bad, the good. He pretty much was an open book to me. And that's what allowed me to like, okay, let's do it. Let's stop waiting and just go ahead and take this action. So again, he introduced me to some things. And then again, I educated myself and learned about Bigger Pockets, went on to Bigger Pockets, utilized their tools to analyze a property, a single family property. And that's what got me to get the Memphis single family house, which I still have today, and it's currently cash flowing with the tenant in place.
So what was the like as far as the identifying that market?
Identify. Again, Bigger Pockets was probably the key factor into that one as far as location. They were harping at that time. I think it was Brandon Turner. He was still a co-host of the podcast and a big contributor to the platform. Listening to his webinar and going to his webinar virtually, that's what allowed me to look into. He said, start with your home. I didn't want to start with Milan because Milan, Tennessee is a smaller city. And there really wasn't much in that market, even though you could still find something, depending on your location. Like you can still find something, some type of house that could cash flow positively. However, I wanted to look in a slightly bigger city. And Memphis, Tennessee is prime for that. Not only is prime for cash flow, is prime for more tenants to be placed in your property. So
is it in like a 2-hour radius of your home, or?
That's right. That's right. So it's probably about an hour, 30 minutes, if that.
Okay. So it's
But yes,
accessible to you.
Oh yeah, absolutely. So also granted, I wasn't in Milan, Tennessee. I wasn't in Tennessee at all when I looked for this property and when I purchased this property. I was over here in Okinawa, Japan when I purchased the first property. So just wanted to put that out there as well. So it can be done whether you're boots on ground, whether you're overseas, whether you're in another state. You can still purchase a property if you're willing to take the necessary steps, if you're willing to take that action. So got the Memphis property again through Bigger Pockets, doing the calculation and going to Brandon Turner's webinar. they still have a great team. If anyone's interested in joining Bigger Pockets in their program, they still have a great team. They still have solid framework. I just ventured out to other avenues as I approached the game of real estate and moved on um, to bigger properties. So the single family purchased that one. Again, it took some time for me to get that. And then I ventured on over to the LP side as a limited partner for an industrial project in a syndication. And this is what really opened my eyes to become to know that there was multiple aspects of real estate to invest in, multiple vehicles to invest in, and there's no one-way train. You can still win as long as you do the due diligence. Here is what I didn't do is the due diligence for the syndication that's in Mansfield, Ohio. However, it is still performing well to this day. So I was introduced to this limited partner syndication, again, industrial triple net lease. Yeah. So I was introduced to that, and I was intrigued by the syndication aspect. I didn't know what a syndication was. I started asking questions, and that's when they told me it was where they pool investors' monies together to invest in bigger projects.
Yeah. Now, do you have a specific class that you go after, like class A, for the better assets, B, C, D?
That's a great question as well. So let's go back to the single family. The single family project that I have, the single family house that I have in Memphis, it's a C class B area. So when you're looking for that C class B area, that's where your cash flow starts to come in. So I do typically look for the C class, B class when it comes to single family or smaller multifamily or residential properties. Same thing with the multifamily projects as well. I look for C and B class. However, I am currently working on an A class asset, and this is just because of the due diligence that I did with the partners that I have sponsored that they're sponsoring the deal. And this project is looking really promising, and that's just because of the due diligence. Again, I typically lean on a B and C class, but this A class opportunity it came forward, and again, I jumped up on it. So yes, I typically look for B and C. That's just because cash flow is, I'm always looking for cash flow in regards to that. A class are typically not so much as cash flow. You can find cash flow properties with that, but those are typically where you have appreciation. Those are appreciative properties. And I typically don't lean on appreciative because those are kind of like speculative, So when you lean more towards the cash flow, that's a monthly income coming into your account where you can deploy those expenses elsewhere. So let's see. So single family limited partnership with the industrial and again, so the syndication world was brought up to me, and that's what led me to want to learn more, not only about syndication, but just multifamily in itself. And why did I want to learn more in regards to that? So the single family house, it's eventually going to be vacant, right? And that means that if I don't find a tenant in place, I have to cover that mortgage until I have a tenant in place. So that could be 1 month, 2 months, 3 months, 4 months, etc. And you have to lean heavily on the property management when you're out of state, out of country, to find that to fill that vacancy if you're not there. So
right, we're going through that right now with one of our rentals.
Oh yeah. So when you have an investment property, single family house, and you don't have a tenant in place, now you're coming out of pocket and you don't have that passive income, that steady passive income to ensure that the property is taken care of. So now I'm paying out of pocket and finally get a tenant in place, and then we're back to getting up to speed. However, for the multifamily, when you have a multifamily project, you have multiple units. So if one tenant gets out of place or is vacant, one of the units is vacant, now you have these other units that can still cover down as long as you've done the due diligence, you do your numbers right, the underwriting is correct. It is covering what that vacant member or that vacant unit is now removed from. So you don't really have to come out of pocket unless, again, you're not doing the underwriting right. But as long as you have those tenants in the other places, as long as it's 95, 85% full, then you can still focus and not have to come out of pocket when it comes to maintenance, when it comes to paying the mortgage and things of that nature. So now I got to single family. This is vacant. I'm studying on syndications. Now I'm studying on multifamily, and that's what led me into investing with this MAG Capital on this triple net lease, because I didn't do the due diligence, but I did do the study on the syndication, and the people that I invested with, I did trust, because we built the trust from before, so I trusted them. I still, even though you know these individuals, I still would not recommend any newbies to just jump in on an opportunity if they trust and know someone. Just do your due diligence as well, and know that this project is going to be a working thing for you, and so on.
So let's talk about that. How did you do your due diligence?
So with the due diligence, right? So we want to ensure that yes, you know and trust the team, but also you want to do a market analysis. And I guess we can go ahead and kick it off with that. So market analysis, what is that? What does that entail? With the market analysis, you want to ensure that one, that the location that the sponsors or yourself is investing in, you want to ensure that a good population, like let's say a metro, you have a metro of individuals there. You want to ensure that the population is on a steady climb and not a decline. Where do I go for that? City-data, city-data.com has been a big influence on where I look into the evaluation of the population growth. Not only that, it does provide crime data in regards to that. And just when I say crime data, you want to look at how often or how serious the offenses are within that local area. And city-data.com, it gives you based off of the previous year's crime data, it gives you a basic information on regards to what types of crime has been committed in that area, and how often and how frequent the crime has been committed. So case in point, if it's a murder capital, like sometimes the Atlanta area, or sometimes Memphis area as well, depending on where you invest, the crime per capita could be a differentiating factor on what type of asset you have in that area. So some areas in Memphis, the crime is it is not in my realm of what I want to invest in. So if I have, let's say 100,000 people in a specific community, if I have a high percentage of murder per capita, then I'm probably not going to invest in that area. And the reason why is because it's going to be more than likely a D class property, and that type of property is going to cause a lot of strain. Now, with that being said, the D
Can I
class.
interrupt? You don't want to be
Yes, please.
blindsided. if you get the pun.
Can you say that again, please?
You don't want to be blindsided.
That's a perfect way of saying that. Thank you, Stephen. Is that how you pronounce it?
Yeah. Uh-huh.
Excuse me. He's absolutely 100% right. You do not want to be blindsided on that.
And that's the
you
pun.
can be.
You know where I get the pun from?
Where'd you get that from?
The movie, The Blind Side. That was based in Memphis.
You're right. You're right. That I watched that movie a couple of years ago, but that was a great movie. But yeah, you do not want to be blindsided, especially like this is why it's important to do your due diligence, within the location, within the type of property, knowing that, the income levels of the individuals in that area as well. So, what do I mean by income? So, again, when I'm looking at the income, I'm looking for what types of jobs are in that area. I'm looking for high income, for A class area, for B class area. I'm looking for still high income individuals. However, it's not going to be as high class as the A class. It's not going to be as high end as the A class. Same thing with B and C. The D is for like, you're not going to find let's say innovative technology in a D class area. I'm going to be honest with you. So those A class, B class areas is where you'll find the doctors, the lawyers, the Amazon plants, the big industry plants, the technological, electrical, all types of all these new technological jobs. You'll find those in the A class and B class. Now, for those C class, you won't typically find those high end jobs, but you can still find those hardworking jobs as far as like maybe the food industry. When it comes to fast food or any type of high end, not high end, but kind of mediocre jobs. Again, everyone needs housing. I'm not saying for you not to invest in D class, not to invest in C class, only invest in B, only invest in A, because there are some parameters where you may need to dive into the D class and maybe even help out and invest in the areas of the D class, just for you to get a start and see what you can and can't do, or what's more affordable in your market. Because in a D class, you're going to have those properties where it's probably going to need a lot of maintenance. It's probably going to need a lot of due diligence, and it's more than likely going to need a really, really good property manager, because they are going to be very, very busy with these D class properties. And that's just statistics giving. D class and some C class are just the harder working areas, and you have to ensure you maintain the properties and maintain a good property manager. You're definitely going to need a good property manager for any D and below class. D, F, C class, okay, but those D properties and F properties, your F class properties, you're definitely going to need a good property manager. Okay. I know I've been jumping all over the place, but let me make sure I get back to the due diligence and everything. So, some of the key things that you're gonna actually need as well for a property, whether single family, multifamily, industrial, maybe not industrial. I'll say I'm gonna stick with single family, multifamily. I kind of touched on it, was the property manager. Having a good property manager is hard to find. I'll say that it can be hard to find. And I'm speaking from my experience, just because, again, I have to trust individuals based on the relationship that we have, not only on the relationship that we have, but the distance that I have. And I really lean heavily on my property manager I know they're not going to take care of the property the same way that I have, but having that trust to know that they are still going to look for a tenant whenever it becomes vacant. As soon as it becomes vacant, they're still going to do the maintenance on the property. It takes a lot of trust and a lot of communication with the property manager, even while I'm overseas, and just understanding that they are doing their job correctly. If not, you have to fire them and hire someone else. How did I find my property manager is, again, I use Bigger Pockets a lot when I first and initially joined. They have a form where you can ask a question, and it's free. Mind you, it's free. And also it's free if you want to do your first property. If you want to do, I think initially it was when I initially joined, it was about 5 properties you could initiate, but now I think it's down to like 3 for free that you can utilize their tools, and you can download the property and you can send it to the realtor. You can send it to whomever if you're looking to get a good analysis on the property. I really do highly recommend, and if you really enjoy that product, I highly recommend that you pay for the services for at least a year. That'll get you at least comfortable analyzing properties, doing the due diligence if it's out of state, even if it's in state, doing the proper due diligence, doing up the numbers, because it calculates based on the numbers that you put in. It calculates how much cash flow you will receive, the cash on cash return, even as far as like the maintenance fees, the property management fees. It does calculate all that for you, and you can see a good number of how that property could potentially be in the near and dear future. So I highly recommend Bigger Pockets, because that's one of the better platforms in regards to single family and any properties for any that has 4 units or less. For the bigger projects, you kind of have to do some homework and networking with other individuals to see what they utilize, and because there's so many products that you can use. But I do highly recommend Bigger Pockets for the units for the properties that are 4 units and below. Okay.
Thank you for that.
So, yes, no problem. Let's see, where can we go to next? So I think I talked about due diligence a lot. I want to go ahead.
No, go ahead.
Oh, okay. So I talked about due diligence a lot, but I also want to talk about
The team though, how did you, I know you said you trusted them, but were you doing due diligence on the team, and how did you do that?
Yes, that's a great question. So with the team that I had, so again, I was on Bigger Pockets in the form, and I was specifically stating I'm out of state. I'm not only out of state, I'm overseas. I'm looking for a property manager for this location, Tennessee, Memphis, Tennessee, good property management company or team that could help me manage the property, and I don't have to really answer phone calls about plumbing issues or anything at 3 and 2 in the morning. So there was a couple of property management teams that were on that list that, as far as Bigger Pockets, and that reached out to me. However, there was one particular company that stood out to me the most, and that was Memphis Management Properties in Memphis, Tennessee. And the reason they stood out to me is because they were investors. And not only were they investors as well, they were realtors as well, and they also did the property management for a lot of the units, a lot of the properties in Memphis, Tennessee. And they had been experienced, I mean, like 20 plus years of property management, knowing the area, let me know the good, the bad, the ugly. And that's what led me to, okay, I can trust this team. I can trust this property management company. And they ended up being my property management team. So yes, I did the research on them. Again, when you're doing the research, that's typically what you want to look for. Are they investors as well? And again, if you're looking for property management, what's their experience like, and the area that they property management in? Because the reason why that's important is if they don't know the area and they're property managers, then it's not going to do you any good justice if it's a bad area and they can't tell you if the roads are messed up or trash is everywhere, or if the houses are in that area are no good, or if you can't go to that place at night. Like, that's why it's important to have a property manager that knows the area and has some experience in knowing the location, and uh, just have some property management experience in general when it comes to tenants and getting that place up to standard. So yeah, that was part of the team.
And then what about your
uh,
industrial team? How did you actually?
So this was a veteran. So
Okay.
we just automatically connected. That's the thing about being in the military too, is you get to network with other investors and other military members, and we just clicked all of a sudden. And he when he talked to me, he was just explaining to me what his company does, and they were Mad Capital, and he talked about the syndication piece. He asked me if I knew what syndication was. I obviously did not know, but he did inform me a little bit of what they did as far as like pulling money together. We invest in other projects, bigger projects, to provide passive income to limited partners like myself. And that's what intrigued me the most. I don't have to do any um, looking for a property manager. I don't have to look for um, an attorney or any of that other nature in regards to the property itself. Count me in. And it's passive income. That's truly passive income when you really don't touch the property or touch anything in regards to what the GP does, the general partners do. Um, it's just you collecting a paycheck based off of your investment, whether it be quarterly, monthly, or yearly. It just depends on the syndication and how it's set up. So we started receiving. I invested in the project initially in 2021
As a limited partner?
as a limited partner.
Okay.
So the exit
No
cap,
operations. Uh-huh.
we're trying to exit. Yeah, we're trying to exit within 5 to 7 years. But I initially invested in 2021, and I have received. Let me say this: the first couple of months, the first 4 to 5 months, we didn't receive any payments, and that's
Yeah.
typical of a syndication. So just think, when you're doing a syndication, they still have to do some things as far as making sure the property is upkept, making sure that any dues, that's legal fees, are paid off prior to deploying that money back to the investor. So I'll say typically 4 to 6 months is where you're not going to receive a paycheck, but maybe, and then there are some where you receive a paycheck right away. But typically for most syndications, 4 to 6 months is where you're gonna wait. And again, it just depends on how it's set up, and just making sure that you know and understand your money is in a safe place. I say safe. But I think it is very safe when it comes to real estate, and I think it's a lot safer than the stock market, because you really can't dictate or predict stock market, maybe unless you're an insider or something like that. But being an investor, it's a tangible asset. You can put hands on the property, you can see, and do the upkeep for the property and potentially make the value of the property go up. So with stock market, you
So,
can't really do that. So go ahead.
so did you do your due diligence on the property, even though you hit it off with the veteran?
I did not do my due diligence on the property
Okay.
at all. I trusted. Again, this depends on your relationship with the individual.
Right. I
If
get it.
you feel like we built trust for months prior to me investing with him and joining in on the project. I trusted him. I trusted him enough to, one, he's a veteran. I trust him to have integrity with all intentions. I know everyone's not doesn't have that integrity, but based off of our conversations and the relationship that we built, I trusted him. I trusted the numbers. I did do the numbers as far as like what it looked like, ensuring that everything was properly analyzed, properly underwrote, and then based off of that, I did take the jump and invested in this project and still receiving monthly paychecks without doing any to this day. So
So what's your return? So I'm not sure, forgive me, I'm a novice at this, and I'm
Okay.
like you. I got someone I work with, and he says it's good or not, sign the paperwork. If it's good, he'll send me the paperwork, sign it, and I sign it, and I trust him. For the most part, he's fairly reliable, and I made some money over the years. So is there, I mean, Donna and I were talking earlier today. She sent me forgive me, a text, for lack of a better word, about somebody out in California, Shamsha, I don't know. And I talked to her for yesterday, and we spoke about, if I invest $10,000, I'll make about 10% of my money per year.
okay.
And so what's the return, if I may ask, on your investments? I don't need specific. I mean, is it 10%? Is it 20%? Is it
What do you
you know,
strive for in an investment? And there is a range and a
yeah, that's it, because like I said, Don and I were talking today about where would it be best to invest my money? And so what's my return? What and how much would I need to put down to get that return?
That's a great question. A couple of great questions. So with the investment that I had, the preferred return was 12% per year.
Hold on, John,
on
can you
the
mute the phone?
It was 12% per year. Thank you, Donna. It was 12% per year. And on top of that, when we exit, our capital would be 80% returned back to us. So on top of the 12%, the 80%, within that 5 year, our initial investment will be returned to us. So the minimum investment amount was $25,000. So within that 5 year, my $25,000 will be paid out on top of the exit, which is the biggest return that you'll receive when it comes to a syndication, is about 80% of
So it's
whatever.
20 grand. So you get 12% a year on 25 grand. So it's a little more than 2,500 a year.
Right.
And you get that for, did I hear it, 5 years?
About 5 to 7 years.
Okay, so let's go ahead. So I get 2,500 for 5 to 7 years, and I get 80% of my original 25,000. Did that make sense? Is that what you said?
So you get your 25K within that 5 years. You're gonna get that all that initial return back, your initial investment back.
Right,
On
plus
top of
2,500 times 5, plus another 20,000.
So exactly. So that you're gonna get 20%, as I were, you're gonna get 80% of that 25%. So on top
Wait,
of
80% of
your
the 25%,
25K,
80% of the 25,000.
right? So you're gonna get your full return on the exit. When they when they sell the property, they're going to either sell or refinance based on that your initial investment. Their aim is to give you 80% of all of your. So on top of the 25% that you the 25,000 that you paid, they're going to give you an 80% back to you on top of that. So let's do the math on that.
So I got it here. It's 45,000 plus another 12,500 approximately for the 12% for 5 years.
Yes, if that's set up that way, if the syndication is set up that way. So that's how mine is set up. So I'm gonna get the 25,000 plus another
20 about.
yeah, about $20,000 more once we exit.
Plus you're
If
getting
that makes sense.
the 12% per year, right?
Plus the 12%, yes, plus the 12% per year.
Plus,
Okay.
if I'm a real estate investor, you get tax write-offs too.
And yes, that's another thing I was gonna cover.
Yeah,
And
depreciation, all
you
that
get it-
stuff, yes.
Yeah, based on the Schedule K, you're gonna get tax appreciation. So the depreciation.
Depreciation.
Depreciation. There we
We
go.
know what you mean.
Depreciation. Yeah, there we go. I appreciate it. So yes, all of that, yes, this is another great way why I enjoy investing in real estate as a limited partner, because of the tax benefits, of the significant return that you're going to get as a limited partner, because they're going to send you a Schedule K every year. And that Schedule K is going to show you the how much you've gained, but also how much you've lost based on the depreciation. And essentially, you're going to pay zero to very little on the taxes on the gains that you receive, because the depreciation is probably going to be more than likely going to be more than your appreciation over the years. But again,
Yeah.
great benefits, great asset, especially with the industrial asset. If you ever want to invest in an industrial asset, because that is really passive income if you ask me, because
The fellow John here is an expert in industrial.
yeah, there you go. I'm pretty sure John could speak highly in regards to industrial, but again, I'm not the expert in industrial, but I can only speak for myself in regards to the passive income that I'm receiving on a monthly basis. So did that answer your question, Stephen? I want to make sure
It answered a bunch. I got a few more if I may.
Can we finish and hold them to the end though, Stefan? Do you mind?
Sure, of course.
Yeah.
Yeah.
So I think that was a great question. I actually love that and enjoyed the question that you asked. So if you do have more, let's dive more into it once I finish up here. Let me go ahead and say, so we talked about due diligence. We talked about the team, due diligence on the team.
Yeah, the asset type. You're in single family,
asset.
you're in industrial, you're doing multifamily now. So
Right.
you're
So
not really partial
diversification,
to.
Yeah.
So tell us just a little bit about that. So you're not really partial to one asset type.
Yeah. So I just want to clarify like why I'm diversifying as well. So you don't have to do that. You are one property away from either becoming a millionaire or becoming the financial guru or financial independence person that you're striving to be. You're one property away from that. And that one property could be a multifamily, it could be an industrial, it could be any type of other commercial asset, but you are essentially one property away from being financially free. Again, I was introduced to the syndication, and I've been pretty much just diving on a rabbit hole in regards to education. I want to harp on that really, really hard, because education, knowing what you're getting into and knowing what type of what type of books, what type of podcasts, what kind of webinars and masterclass that you're in right now, learning from individuals who's already done it. It can save you a lot from being blindsided, as Stephen said earlier. It can save you a lot from losing on your investment, and education is really, really key here. Not only that, having the right mindset when you are investing in these projects. Mindset, I believe, was on one of my podcasts. John and Stacy Conkey were really harping on how deep or how important it is to have the right mindset, because if you look at it, there are ways where your mind can limit you from potentially reaching above the ceiling, because your mind can have this ceiling instead of having this unlimited ability to reach beyond the sky, reach beyond the ceiling, and just to raise the bar for you in your investment journey. So there are I'm gonna go back to myself when it came to myself. So when I initially joined, I was looking at other individuals who are successful, and based off of my experience, my inexperience, and comparing myself to them. Oh, they got here because of this. Oh, they got here because of that. And I didn't, and because I'm not in that position, or I'm not there, I can't do that. So I'm just gonna give up. Or putting these false stories in my head as to why I can't move forward. So what got me into the right mindset was, I think, reading the book Who Not How by Dan Sullivan. And that book, I think, really opened my eyes. And not only did it open my eyes, it just made me realize that it's not about who could do it, but how can I move to the next level? How can I get or gain individuals that are successful, and how can I make that relationship and network with the individuals who have been in a position, in a successful position, or been in a similar position that I am, and can help me move and catapult my business or catapult myself to where I need to be. I really do think that is a great book. I highly do recommend investors, new or old, to look into that book, read that book. There are some really, really great guidance and methods in there in order for you to overcome your obstacle or overcome your limited thoughts that you put in here. Because we do have those limited thoughts. We just have those times where we compare ourselves with individuals who are way above us, which we shouldn't do. We should compare ourselves to who we were yesterday or last month, and what progress have we made to overcome that. Like, again, once I read that book, it was like something clicked, and it was like, okay, I'm going to continue reading. I'm going to continue going to podcasts. I'm going to continue to network on virtual meetups, because of course I'm being in Japan. I haven't been able to network as much as I want, and going to conferences and everything. However, that shouldn't stop you all. You all are there. You're ready. You're here right now. You're here for a reason. You want to learn and educate yourself. But going to those conferences, I did end up going to a conference, and it was Amy Majori's conference, who was one of my mentors and coaches. And again, the networking that you're going to get at these conferences is just unimaginable. So if you can, go to all conferences that you can, listen to all the podcasts, read Who Not How. Not only that, read Rich Dad's Cash Flow Quadrant. Again, another book by Robert Kiyosaki. Two great books that'll get you in the business mindset and get you in the mindset to know, like, I need to remove these limiting beliefs about myself in order for me to move forward and take action and do what it takes to get me to whatever goal that you have in mind. So set those goals, but do the little things first, because those little things matter. And then once you do those little things, it becomes bigger things. So I'll just share a little story about how me and Donna met. Again, I network through virtual means. That's just really the only way I could do it. We are starting a little meetup here with military members and that want to get started investing, or who's already investing and just want to network with other individuals. But I'm doing everything I can to meet up with people virtually, message them back and forth. And if I could go to another conference, I will, and I will. It's just me being here, it's not happening. But I really highly recommend you guys do that.
You
Let's
tell
see.
them how we met? How we met?
Oh yeah, so this was through Yona Wes's LinkedIn challenge. I'm not sure if is it Wes or Weiss?
Weiss.
Weiss. There we go. I was wrong. Yona Weiss. He has a LinkedIn challenge. I think he does it like once or twice a year.
Yeah, maybe once a quarter. Yeah.
Yeah, once a quarter. Once a quarter. And it's just about you sticking to 10 days of posting consistently in regards to business, in regards to life, in regards to what you do, and just finding some type of way to connect with individuals and interact with other individuals. So me and Donna, we connected through one of those challenges, and I saw that she was public speaking coach. I was like, oh man, that's interesting. I know that's like one of the number one fears for individuals, right? So once we met, we clicked, and she reached out to me a couple of months ago in regards to jumping in on this Hook Up with Real Estate podcast, and let me be honest, I was nervous. I was. I was like, man, she's reaching out to me. It's just, again, one of those limiting beliefs I put in myself. And that was at a time where I was kind of like on the ends of like, do I want to continue this? Do I not want to continue this? And then I don't know what it is now. That maybe you had some magic, and just I feel like a week after I said yes, I'm going to do it, things just started rolling in place and started going to the positive end for me. So yes, I joined. Yeah, so thank you. Thank you both again for letting me join. But I'm so glad you reached out to me, because if you would have reached out to me 2 years ago, maybe even a year ago, I would have said no. Like, I can't do this. I'm not worthy. But the obstacles that I overcame, the things that I've done to get to this point, is truly incredible. And I'm not trying to toot my own horn either. It's just having kids, being a father, being a husband, being in the military, being overseas. All these factors could have stopped me, and I could have said, no, I can't do this because of this X, Y, and Z. Yes, I have a lot of things going on, but I'm finding the time. That's what you need to do as well. Find the time to get involved, or get to where you can learn as much as you can and network with as many people as you can, because you never know. You may be in my seat one day and sharing your story. So I always want to, share my insights and help others. I always wanted to help people ever since I was a small boy. And I'm so glad I'm having the opportunity to not only speak to individuals about real estate and my journey, but also to lead Marines, junior Marines who wants to be in my shoes as a leader in the near future, or transition into the civilian sector to be a leader. It's been an incredible experience. So I really, again, I felt like I had to share that. And I'm sorry if I'm jumping on a tangent again.
No. I do have
need to
one
share it.
question though, but how much of being a Marine helps you to take action versus, your innate
That's a great question.
personality?
Yeah. let me see. Let me say my struggles in the Marine Corps initially when I first joined. It was hard, and I did not see myself going beyond 4 years. And again, I think we talked about me having mentors in the Marine Corps, translated to my business side in the real estate and of having mentors. That's why I joined Raise Masters. That's why I joined Aiming Majority's program. That's why I'm in another group where we're masterminding and talking about capital raises, talking about the next step, talking about holding each other accountable. Again, that's the same thing that correlates in the Marine Corps, correlated to my business on the outside. So having mentors, having coaches was key. And not only that, we have leadership principles that we go by. And one of those is one of those leadership principles that I really do enjoy is setting the proper example for your Marines. How does that translate out into the civilian sector? Is for me is what I'm doing right now. Like, how do I show others that this is the right way to do things, this is the correct way to do things, and how do I lead them to be better than I am, to be to reach their potential, to become either better leaders, better business leaders, etc. I'm no expert in that. I'm just letting you know right now. You saw the disclaimer earlier. Donna and Ken wrote that Ken read off, but learning how to lead Marines is taking me to a position to learn how to lead or teach, coach, maybe mentor other investors or other individuals who don't know how to invest in real estate, to make their money grow and work for them. That is a key principle of mine. That is really where I feel like I have a good part in helping others like grow their income and just talking to them, understanding their goals, and getting them to a position to become better for the next year, become better for their family, become and just be in a better place financially today, taking those small steps to become a better, to be an FI for next year. So, yeah, so that's where the Marine Corps side comes into play, and talking to people too. Like, so initially, again, I said I was going to do 4 years, mentor, guiding me right direction, set me in a proper place to do another 4 years. Again, I was going to get out at 8 years, and then again, mentors guiding me in the right direction to do another 8, another 4, and so on. And here I am 14 years later, and I'm doing the same thing back and forth. So it transitioned, I guess, just to reiterate, like, the diversification piece, and why I'm not just holding on to the single family and just sitting and waiting for the single family. I'm moving on to multifamily projects. I'm moving on to Class A projects. I'm moving on to being a limited partner, being a syndication, and it just made me want to learn more about investing in other opportunities that present itself to me.
Yeah. I think being in the Marine probably also feeds you a new set of recruits all the time. They have somebody new to talk to.
Oh yes. So I've never been a recruiter, but I've been told, like, you could probably be a recruiter. I'm like, yeah, I don't want that though. I'm good.
I'm just saying, like, a new pool to share your real estate investing story.
Absolutely,
Not necessarily like
absolutely.
recruits in the traditional sense.
Oh yeah. So yeah, in the civilian on the business side of recruiting
Yeah.
other civilians to be a better version of themselves with investing in real estate.
Okay, so we have about 20 minutes left. Do you want to just quickly talk about, are you talking to brokers? Are you talking to investors? Who are you talking to?
Great question. So I'm right now I'm a fund manager. I'm not sure if I've shared that. So I'm a fund manager. I'm looking for multifamily projects. As I stated earlier, I'm working on this Class A project, raising capital, excuse me, for that project. And as a fund manager, I am taking these funds. It's sort of like a syndication, if you will. But I created a SPV, what is called a special purpose vehicle, to raise capital in that the investors will deploy their capital into this SPV, and this SPV will then invest in the sponsored project for the multifamily Class A project. So as a fund manager, I'm just managing the funds that's in this SPV and deploying that capital into the project itself. So I'm not raising capital as a capital raiser for a limited part or general partnership as a syndication does. I'm raising funds for the
fund.
SPV to invest inside of someone else's project. So this is typically how I get away with raising capital and being paid. I'm not being paid to raise capital. I'm being paid to manage the funds that's raised for the project itself. So that's what led me to be a fund manager. And again, being a general partner in a syndication, the difference is you can't be paid just to raise funds. That is against SEC regulations.
Right.
You have to either you raise capital and do something else on the side.
Like
And
asset
that is something that
management.
so that is something I just don't have the time to do. However, how can I get paid to raise capital? Can I raise capital? Yes. But how do I do that is being a fund manager and deploying those funds into special projects, whatever I see as fit. And again, like building trust is a big thing. Building trust is a big thing. And doing the due diligence on your own, or even having someone who if you don't know how to underwrite the project yourself, having someone with the skills, the tangible assets that they can underwrite. They're comfortable with the numbers. Having them look at the deal for you. Again, it starts with networking and going to those conferences and learning who has what type of skill to help you get to your ultimate goal.
Right. So, okay, so how did you come to be a fund manager? You just saw that you couldn't raise capital, so you thought about an alternate way, or was there some other catalyst?
So I wanted to raise I wanted to just raise capital and not have to deal with the other jobs of being boots on ground, which I can't be boots on ground. I can't be property management. I can't be asset management or always investor. I can do investor relations, but it's just being just a capital raiser and being paid just to manage the funds and send the funds off. And doing that within SEC regulations. And that's when I was joined into the capital raising class, capital raising mastermind called Raise Masters for Hunter Thompson's
Thompson. Yeah.
Right. And that's where I learned about the fund manager and being a fund manager and how to raise capital without being a GP and just being a fund manager to raise capital for projects. So that's what led me into that.
Did you set up the fund yourself, or how did you get your fund set up?
Great question. So I did hire someone to help me with creating the LLC to be or SPV to be able to raise funds. So I did hire someone. It was Prime Corporation, but I'm also working with another coach of mine who's helping me tailor my business towards more accredited investors and ensuring that it's a streamlined process and smoother process, and in the works of building a website and everything. And it's a lot of things that's going on as far as a background that a lot of folks don't know. But yes, I did use or hire someone to help me build the SPV.
Okay, yeah. All right, great. And how's it going?
So far so good. Again, little steps will get eventually snowball into bigger steps. So taking that first leap, taking that first step towards uh, getting the SPV created, and hiring someone to help me get this done. It does take time, but it's the little steps that you do to get you to A to Z. That's what you got.
Yeah. So beside hiring somebody, is there anything else that you can share about, action taking with a fund to fund, like finding people to invest in your fund?
That's
How
a
are you?
great question. Yeah. So how do we find those people? How do I find? I found them at virtual meetups, uh, through my podcast, through podcasts like this, and people sharing your story, on either social media platforms or them just reaching out to you randomly. Because I've definitely had a couple of investors reach out to me randomly, but also just knowing, like, people will not know you unless you put yourself out there. And that was probably not probably that has been a little struggle for me. I'm not a social media person, but I do tend to not be as consistent as putting myself out there. But if you're not, other people will, especially if you have a good character, and a good head on your shoulder and a good mindset. People will reach out to you based on sharing stories with other folks. Because I've reached out to other individuals who don't post much on social media, but I've heard about them and they've helped me along the way. So, big thing is just continue networking. You never know. Again, like you never know, and sharing your story, going to a bar, having a beer, or Mai Tai or whatever you want to have. Just having a conversation with strangers. That's another thing, is just having conversation with strangers on what you do and who you do. And I think Amy Majori, she was really helpful in regards to that. Getting outside of your shell, being yourself, but also sharing your story on how you raise capital and make double digits returns back to their investors. And I really commend her for that, and I commend her and that conference that I went to, because the networking that I had with there at that event was incredible. And again, going to these conferences, you never know who you are talking to. You could be talking to accredited investors that is looking to deploy capital somewhere, and you could be that person for them. So just getting outside of your shell. I know COVID kind of was like that weird factor in regards to, like, we didn't know what was going to entail, and it kind of brought us back into like not wanting to talk to people, not getting close with them, et cetera, et cetera. But don't allow that to cloud your mind and prevent you from talking to people. I really do believe, like, we're social human beings. Just talking to people will get you to, you never know, get you to unknown levels that you never imagined.
There you go. And one last question about your fund to fund. So, like, why did you pick the Philadelphia market for that project? Did you do due diligence? What was it about the market?
So, yeah, great question. So I kind of I didn't kind of, but I talked about the Class A and the type of jobs in that market that you look for. So I was brought the deal was brought to my attention, and it is in an area where there is a lot of potential. So those are things that you look for when you're doing the market analysis as well. What's the potential of the job market growing, and the growth of the individual, the growth of the population in that area. So in this area, there's highly skilled individuals, meaning medical doctors, innovative projects. There's cell and gene therapy. there that's being developed.
Hmm.
It's close to an Ivy League school. And there's 3 different properties that's being worked on right now. So one is an existing property, the other 2 are new development projects. And they are looking to be done pretty soon with the construction for the 2 newly built properties. Now, for the existing property, I believe a good percentage, I believe 80%, 80 to 90% of the individuals that live in this property are high income earners, meaning typically in your Class A projects, you're not going to have to worry about really maintenance as much as you do with the B and C and lower classes, because these are high level, high end markets, high end buildings where the property is taken care of and the tenants usually are responsible. I'm not saying all, but they usually a little bit more responsible of the property, and they take care of it because it's nice, it's clean, it's fairly new, and they don't want to have to come out of pocket for making any damages to the property. So what led me to it is it's a group of doctors that lived in this place before and worked in this place before and seen the potential that it could be. And it's not only that, it's close to an Ivy League school, UPenn. I'm not sure if you ever heard of that
Oh, yeah,
school.
of course. Wharton
Very high
Business
level
School.
school. Oh yeah, very good schools over there. Good location. The population growth is steady. The highly skilled workers are steady, and they're not looking to move anytime soon. So I had to jump on it. That was it. The numbers look great on this deal. Again, this is only for accredited investors. So yeah, I jumped in on this market just to see if I could raise the funds necessary to get in on this and start building a legacy for my family along with other families as well, and ensuring that they get to own a piece of the land that they live in. So
That's awesome. All right, so let's just summarize. We talked about 7 ways to take action as a new real estate investor, and we talked about the market, where you're investing and why. We talked about the assets types that you're investing in, multifamily, single family, industrial. We talk about your asset class. You're started out with CB, now you're focused on an A property. You identified your team, building trust with people. You're networking with people who can bring you deals. You're networking with investors who can fund your deals. And you spoke very highly of a lot of educational books and mentorships and podcasts and webinars. So, one of the things to do is to put I put your email in, but any contact information, your website, and then we can move to the Q&A portion of this podcast.
awesome. Yeah, so email, yep, Donnie put it in there, Arsenio Hart _25@yahoo.com. I don't have the website up yet, but that is in the works. Hopefully within the next month or so, I'll have it up and ready. And then
Your
as far as
podcast, how do
LinkedIn,
they find it?
oh yeah,
Oh.
so I'm getting with LinkedIn, Arsenio Hart, just plain old Arsenio Hart. Instagram, if you want to follow me there. That's mostly about my kids and how they grow up. Not so much real estate, but LinkedIn is where I typically post about real estate. But Instagram, the Arsenio Hart, on Instagram, and I'm on Facebook too, but I don't post that much on Facebook. Same thing. It's more about kids and family. But also, yes, I have a podcast called Action Takers Unscripted, and I am on Apple Podcasts, I'm on Spotify, and I'm also on YouTube if you want to see my ugly mug on there. So, so those are the 3 places that you can find me as far as my podcast. And those are my contacts if you want to reach out to me, talk about investing, talk about how I can help you. And if you want to join on any of the programs that I mentioned today, it's tons of programs out there. It's ton of great, incredible resources out there. It's just good for you to just hone in on what type of skill that you feel like you can provide to a team, or what specifically that you want in life and in your investment journey.
Thank you. So I'm going to stop the recording now, and then we'll go to the Q&A portion.